So, like we said, markets were down on Friday, but here we are. S&P is up 3.5% this week. Nasdaq's up 5.6% this week. Positive every day. We got to talk about Wednesday. Heck of a range. I mean, markets look like they were dead in the water, and then big turnaround on that day. I don't know about you, but see, that was the day where I didn't trade anything. Like, I didn't. I was waiting for lower. I was trying to safeguard myself. So. I didn't do what I could have done, but it's fine. I don't know about how would you guys did you guys do anything on that day? Any great trades occur for you?
For myself, nothing spectacular. I did, unlike what I just said a moment ago, look for some individual stocks because I had a little bit long portfolio, a little long delta in my portfolio. I did not go to the indices because, like you, Jamal, listen, you're down 70, 80, 90 handles at one point. And I get the futures traders, trying to catch a falling knife there. But let's just say you bought them when they were down 70 instead of 90, which is a great weight. And now you're out, 10, 15, 20 handles. You get back to unchanged, you're pretty much taking them off, I think. I mean, or you're changing the position, you're getting smaller or you're doing something, and you get to down 50 or 60 where you make 10 or 20 handles on that trade. You're probably getting out. I mean, unless you get hit over the head or you've got an appointment to do or something like that, it's very, very hard to hold that position. Now, if you caught it right, and that's what I've always said about trading, like you can have two people with the same exact position. One breaks even or loses small or makes small, and the other person, does very, very well with the position because their timing, their luck, or whatever it is, just happened to be a little bit better than the other individual. The exact same account size, the exact same outlook on the market. So timing is everything when you're looking at trading here. There's just no way to get around it. And that's why we try to take that timing out of it by going to the 45-day options. I know, Nick, you have a smaller account that you like to play around with sometimes in your own personal life where, you'll screw around with the 0-day options. They get down to $1 or, 8 times like this, 50, 60 cents. And, you're looking for a little bit of a reversal of action or a continuing of action. You hold these, how hard it is to hold this. Go ahead.
Yeah, I think it's important to, when you're looking back in hindsight, it's easy to say like, oh, I should have held it and I could have got way more out of it. And in practice, it's a lot harder than that. I mean, just like when you were talking about, you get a 50 or 60 point move in your direction, you're not expecting to hold that for another 100 points. Right. I mean, it's hard. That's a really hard thing to do. It's hard to hold a 5x to a 25x like that. You look back on it and you're like, oh, well, why don't I just hold that? I missed out on the other 10 or 20x. In real dollars, it's hard to do that. And the other point I will say about this move, we did come into the day the week with like a VIX at 20 or 21 ish. So, to put it into context, it was certainly a big move in one direction to the upside, but it really wasn't exactly that far out of what implied volatility was. I mean, realized volatility on a day-to-day basis was a little bit outside of what 21 VIX would imply, but it was it was wrapped around there. It wasn't like we were seeing 3 standard deviation moves based on what the VIX was showing. So, coincidentally, it all went in one direction. So it seems like it was just a face ripper, but it was right at what the expectation was for the day.
Really good point. So we had, of course, the things that we're waiting on this week was PPI and CPI. Like we just referenced, that Wednesday CPI, I think the main takeaway on that was that inflation rose a little bit. And for those who were waiting for a 50 basis point rate cut, the hopes got dashed a little bit, right? I mean, it would seem, even though they seem to be right back up. I don't know, this thing's fluctuating a lot, but PPI kind of muted, but the market was already set on its course. And we still rose yesterday. Dollar weakness helped fuel gold, record high gold now above 25.50, and then silver up 7% on the week, above 30. So big moves there with regard to inflation. You speak about individual names, Tony. A lot of times when I look at individual names now, again, trying to safeguard myself, when we get volatility, I end up just looking at the Dow. So that's kind of what I do. I look at Dow names and then I go from there. And so speaking of Dow names, if you did that, it didn't exactly work out. Goldman's in the Dow, but these banks got hammered this week. Goldman, JP Morgan, and Citi fell on some pessimistic outlooks. Not that great, but All of that said, Fed futures is still implying 100 basis points of rate cuts, which means we only have 3 meetings, so it's implying that we're going to get a 50 basis point rate cut. Yeah, so I mean, and we've been this has fluctuated all year, right? One minute they were, saying that we need rate hikes. Next thing you know, we're talking about 100 points of rate cuts. So
Sure.
take it with a grain of salt. This is the last 4 weeks of volatility curves. Obviously, the week of the jobs report, things were fairly elevated, somewhat calmer since then, even though we've had some moves, but somewhat calmer. You can see that. I think the big takeaway here is really the difference between September and the October bump, which incorporates the election, right? I mean, at times we've seen this thing as wide as $2. It's been as narrow as 1 when we've gotten close to backwardation. So that has been breathing a lot too. I mean, look, we've had some interesting opportunities here recently, and the VIX curve has just moved a whole lot over the last. I mean, if we go over the last 2 months, you'll see even more, right? Like this thing is been breathing up and down.
Yep.
It's still a ton of contango that's baked into going into the end of the year, and so it'll be interesting to see, like, over the next month or so, once we get into that October volatility contract, because it's going to be much higher, and there's not, you don't have that same contango. So volatility is probably going to stay, bid through the end of the year, or at least that's what the curve is implying. So it'll be interesting to see, you're going to have a week where we go from a 15 or 16 vol future to 18, 19, 20 vol future. And that kind of is a, interesting change.
This is what I was getting at. Look at this year, man. Look at April, where we see these are IVRs for Qs, IWM, diamonds, and SPY. And look at April when vols are high. Look at a month ago when vols are high. We're just coming off a little bit of high regime, nowhere near as high as those other two. But these are the peaks and valleys that we've had, man. So if you've been able to place them, you've been able to do pretty well throughout the year. It's like we said, it's tough. You never know. Sometimes maybe you got in too fast, too quick. And I think that's the thing you want to avoid because you just don't know when 40 IVR turns into 60 IVR somehow, right? And I think that's the thing we're talking about here, to just take your time. But we've had some bumps. We've had a couple of bumps this year.
Yeah, and I'm actually going to take it from the other way too. You get in and volatility continues to rise. You had a 20 vol, goes to a 30 vol, and you get in. You had an opportunity, if you could roll, stay mechanical, keep your size right, where you get vol back down. Now, I don't know if you got the stock move that you need or anything else like that, but at least you had an opportunity. I mean, this, I believe, from what you're showing here, looks like a trader's dream who sells premium. Yes. I mean, this is what you're playing for. You're not going to catch everyone, but this is what you want. When volatility goes completely sideways, or if it goes off a big completely straight one direction, up or down, it makes it a lot harder for volatility. This has been nirvana, I think.
I mean, you get 2 of these in 1 year, you're lucky. We've gotten 3. I mean, with the promise, maybe more. Yep. So it is a trader's dream.
Yep.
Let's move to the next slide. So this is a chart of the changing borrowing costs around the world. I think I just saw Russia raise their rates again. I think I saw that this morning. But no. As you can see up top, the guide greater than 100 basis points is yellow. Cutting by more than 200 basis points is really strongly blue. I mean, look at South America, Latin America. Look at Canada, right? You look at a lot of Europe. Obviously, has cut a decent amount. Of course, Japan's raising. You can see Russia's raising. A few countries in Africa. Notably, when you talk about developed countries, U.S., India, and Australia have yet to do anything, have yet to cut, but that's kind of the boat we're in. We're taking our time, apparently. Fed's being data dependent. We'll see what ends up happening.
The buzzword of the year.
Yeah.
Cut?
Data dependent.
Oh,
the buzzword of the year.
That's 2 words, Nikki. That's 2.
Buzz phrase. Buzz phrase.
He hyphens it.
Yeah, hyphens it. So
Walmart. The impetus for this is a little something I harped on last week, and just more again. Dollar General, Dollar Tree got whacked on earnings recently, talking about how their customers are struggling. Big Lots is going out of business. Five Below. First of all, none of these stores charge what they say they used to charge, and Walmart has dropped prices on like 7,000 items. So a lot of these discount retailers are struggling right now. I mean, this is I don't know. It feels like a little canary in the coal mine for the people who love to talk about recession, but. It's something interesting going on here. Again, evidenced by, I've been around long enough to know when you look at a whole industry and you see something like this going on, there's one outlier, there's something going on within the industry, is my point.
Yeah, it can't be. I mean, this is worrisome for consumers, right? I mean, you want competitions to keep prices in check here. But you're right. I mean, if you look at Walmart stock, it's been a moonshot, and obviously the rest of these have not. For me, I mean, I think, and we were going to touch on it a second ago in the last slide. I mean, you got gold higher these days. You've got inflation seems to be percolating. I don't care what the numbers say. I'm just talking about prices. In your daily shopping. And gold kind of confirming it. Man, I really need to see gold go lower. I need it for my position, and I need it, I think, for humanity too. But this is not a great sign. Plus, you can't have a business that says 5 below when everything's 10 below. So, it was a silly name.
I know, right? Yeah. It's you're right. I mean, there's something happening there in these servers. Yeah, gold is 2,600 this morning. Wow.
Yeah.
New highs for gold. Yep.
Wow. Wow. Finish it off. Another lackluster event from Apple. So boring. New products, etc. But yet the company still seems to keep on doing its thing. Let's talk about cuts. ECB cut rates 25 basis points to 3.5% for the second time this year, and their market is betting on 2 more reductions. I can't go without mentioning it. NVIDIA Monster Week, dude. 102 and change. It started. It ended last week. It was part of that big reversal on Wednesday and was upwards of 120 yesterday. I know it closed at 119 and change, but the AI trade is clearly still alive and well. Oracle big week too. Most of yesterday actually of a big move, and a lot of it's being attributed to AI stuff. So
Oracle up $10 this morning too.
What?
Yeah, Oracle's trading 171, up another $10. I like another earnings event in Oracle. I don't know how many earnings Oracle can have in 1 week, but Oracle up $10 this morning. That's gonna leave a mark on some people's arse.
Jeez. Retail sales next week. The only reason that's interesting, right? Because we're talking more and more about consumer and what's going on. For those who are interested in GDP, always remember GDP. 2/3 of it is consumer spending. So retail sales is your first look at that, and then of course next week, big news. Fed interest rate coming up on Wednesday. We'll see if they finally cut. We'll see what ends up happening. I assume they are, but hey, who the hell knows? It's going to be a day, that's for damn sure. Research, September 10th, OJ, Jade Lizards and implied volatility skew. Check that out.
Yeah, bonds getting back to them right now, 126.21, certainly signaling a rate cut of 0.25%, obviously, for sure. Maybe flirting with that half again. I don't know. Market's chugging along, and I don't think I do it more than a quarter, but I'm not on the chair, so who knows? What is your bet right now? If you had to make before I let you go, Jamal, quarter or 0.5%?
Quarter.
Nick? I mean, it's a 50-50 shot right now. Looking at the Fed tool, they have a 53% probability of a quarter, and then a 47 at a half. So
it's been 60-40 for most of the time, leaning towards a quarter. The last couple of days. Now that bonds have rallied, it's become more of a 50-50. So that's why I ask, what do you think, Nick?
Quarter.
Yeah, going into an election, you know what I mean? Yeah. They're not gonna do a half. That would be my guess. And I think it'll be disappointing to the market no matter what they do anyway, but that's just me. All right, awesome.